Well, hello, Internet, and welcome to part one of a pretty long tutorial series in which I am going to teach technical analysis as well as chart pattern analysis. About a month and a half ago, I made a stock market prediction, and that stock went up 300% in 5 days, and I said that it was based off of technical analysis that is going to be taught in the video you're watching right now, the first part anyway. And in this video, I'm going to show you how to download real-time data, stock market data, and I'm also going to dip my toes into candlestick chart analysis and then also cover moving averages in multiple different ways, death crosses, golden crosses, and a whole lot more. And I have a lot to do, so let's get into it. All right, so I'm going to give you an overview of what's going to be covered. I'm going to show you how to download multiple different increments of real-time data for all of your different stocks. I'm going to show you how to create candlestick charts as well as moving averages, as you can see right here. And then you can go and just click on these little buttons and zoom in on specific time frames. And you can also come in here and let's say you wanted to zoom in even more. You can just do that and you can zoom as much as you'd like. And I'm also going to show you how to download multiple different stocks. I'm going to cover simple moving averages, what they are, how they're useful. I'm going to calculate multiple different simple moving averages. I'm going to also go into exponential moving averages. And then we're going to talk about the death and golden crosses and what they're useful for. And I'm also going to cover Cufflinks Quant figure module, which can make it very easy to explore all types of different technical analysis tools available to you. All right, so the very first thing we are going to cover is going to be installing everything. Now, all this code is on GitHub, 100% for free. You don't need to sign up for anything or anything. You just go, you download it, it's all yours. All right, now basically, also in the description, if you want to know how to install Anaconda, which is what I'm using here to write all this code, you can go in the description again, and you're going to see for Mac and Windows, everything here works for Mac as well as Windows. Actually, I mainly do data science on a Windows machine, but I'm doing this for recording purposes. Okay, so if you ever get to the point where you're like, okay, I need to download something like Panda's data reader, and you do not see it anywhere, this is what you do. Actually, I'm going to show you a couple different things. Okay, so you have Anaconda Navigator. Again, if you don't know what Anaconda is, in the description, I have download for Windows and Mac. Just click on that, watch the short video, install it. Okay, so what you're going to want to do some of the time is you're just going to want to click on Environments, and you're going to want to go to Not Installed, right like that. And then you're going to type in, say, for example, Panda's Data Reader. Well, it doesn't pop up here. Why? Because I already have it installed, and there it is. But if you didn't have it installed, it would be under Not Installed. And then you just go and you select it and you click on Apply. All right, that's just that simple. Another thing you can do, which is sometimes easier, is to go to Home. And you can either use PowerShell if you're on Windows, which is normally what I use. But on Mac, you have to use Qt Console. So you can click on Launch. And this is what you're going to do if you get an error in your code and it says, hey, we need this thing you say you want, we don't have it. All right, so one of the for instances where that may occur is with Cufflinks. All right, so all you're going to do is you're going to get pip install Cufflinks like that. Qt console like this. You're going to type this in here and you're going to hit enter. And you might have to hit Y one time to say that, yes, you want to install it. So anywhere where I have, I'm not going to do this. So because I already have it installed. So any place where you get an error, that's what you're going to do. So you're just going to read this, and it's going to say pip install Cufflinks, and you're going to copy and paste. Pip install Plotly. This is a specific version number we need. If you don't do this, it won't give you the right version. So just copy that, paste it inside of the Qt console, and hit enter a bunch of times. You're also going to have to do the same for Yahoo Finance. All right. So that is how you install everything whenever you are first setting up everything to work for you. All right, so there's all that stuff. These are all libraries and different modules. What I want to do first here is I want to show you how to get different real-time data for the different stocks that you're going to be analyzing. And we're going to be using the Yahoo Finance library to do this. And the only thing you have to pay attention to is there are valid periods for the data that you want to get. So what I'm going to do is I'm going to get Microsoft data, and all you do is say YF downloads like this, or download like that, and then you're going to say ticker. And you're going to have to know the ticker that represents the stock that you are looking for. And this is going to be equal to ticker. All right, so there we are. And then you need to go up here and you have to do a valid period. So you could get 1 day, 5 day, 1 month, and so forth. So what this means is you want 1 day worth of data and you want every minute of price changes, okay? So what we're going to do is I'm going to get 1 month and I'm going to get every 5 minutes. The reason why is if you want to get 1 minute, you can only get 7 days. All right, so that's, you can change this as you would like. So play around. All right, so what I want is I want 1 month, which is the same as this guy up here, right here. So 1 month. So just put that exact thing inside of there. And then I'm going to say that my interval is going to be equal to every 5 minutes. All right. And then to output that, you just type in Microsoft. Whoops, I need to run everything. So let's do run all like that. And then go back down here and, tickers. Sorry about that. Run it again. There you go. So there's all your stock data and everything is going to be updated every 5 minutes. And every time you run this, it's going to be updated over and over and over again. So that is how easy it is to grab all of that data. All right, so now what I want to do is I want to show you how to plot a candlestick chart using that data. So what you need to do is you have to, first off, define your XY axis, and this is going to be based off of the index. This is the index, which is called date time. It's going to be the month and the time. All right, so that is going to be what you're going to use for one of your axes if you want to go and create candlestick charts. And I'll briefly explain candlestick charts after this, and I'll probably do more detailed later. This tutorial is really going to be focused on moving averages, getting data, plotting data. Believe me, that's complicated enough. All right, so we have that, and now what we want to do is we need to give it adjusted close information. If you're wondering where that's coming from, it's coming from right here. So you just have to put this exact column name in, and it'll put all of that information inside of there. So adjusted close is going to be the close variable. You're going to also have to get the daily high. I'm just going to copy this, and this is called a data frame. There's a link in the description also, and it is NumPy Pandas and Plotly tutorial. If you really want to understand this stuff, watch that video before you watch this. Then you'll completely understand all the major tools of data science in a 1-hour video. All right, so if you're serious about understanding this stuff, you should watch that video because it explains just about everything you need to know in 1 hour. All right, so low, guess what? We're going to put low. Again, this is just the column name, low, right there. All right, so what else do we need? Well, I need a opening price because that is what the candlestick charts are based off of, as you will see here in a second. So, and that is going to be under the open column, all right? So those pieces of data. What I also want to do is I want to calculate both 5 and 20-day moving averages. Sometimes used, sometimes not. I prefer longer term moving averages, as you will see later in this video. But for now, this is what we're going to do. Okay, so I'm going to take this data frame called Microsoft, and I am going to add to it a new column called moving average 5. And what I need to do is calculate that. I'm going to show you 2 different ways of calculating moving. Actually, I'm going to show you, I don't know, at least 3. All right. So this is one way of doing it. I actually use another way, which I kind of prefer, but this is fine. Okay. So we're going to say 5. That means that we are doing a mean price for every 5 days. All right, and to do that, you just say mean like this. All right, now if you also want to do a moving average, and I'll explain more about what moving averages are later on. It's basically just a trend line that shows the direction, whether up, down, sideways, that your stock is averaging price-wise. Okay, and I'll get more into the specifics in a bit. So MA 20, and you just change this to 20. There you go. There you got your plots right there. So good stuff. And we could come in and if we go Microsoft like this, and run it, you can see now we have our moving averages. Now, of course, there isn't going to be any in the beginning because it takes 5 spaces before we can go and get an average. And here it's going to take 20 spaces before we get an average. And there you can see those. All right, so that's it, just to show you that I added a column to the data frame that contains all this price data for our stocks. All right, what else do we need to do? And basically, the moving average, just to give you a brief explanation, it takes the prices and then divides them by a defined time period. So 5 days or 20 days, 50 days or 100 days, which we're going to talk about later. And the thing that's interesting to understand about the difference between a 5-day and a 20-day moving average is that shorter periods, like a 5-day, are going to react very quickly, while normally in about 2.5 to 3 days, a 5-day, and a 20-day moving average is normally going to react in about 10 days. You're going to see the price changes in the averages. Okay, so the short periods react quickly while the longer react more slowly. And mainly they're going to be used if a stock is, what they're going to do is show if a stock's price is in an uptrend or a downtrend, and many other things, as you'll see. All right, so now what I want to do is create my candlestick plot. So how you do that is you go and candlestick, and then you take all these pieces of data you have right here and plug them in. So you just go x is equal to x, like that, and open is equal to open P for open price, and high is going to be the high value we calculated there. Let's go down to the next line, keep everything on this screen. Low is going to be equal to low, and close is going to be equal to close, and name, I'm going to give each of these guys a specific name, and I'm just going to call this candles. All right, so absolutely after this, then what we want to do is go and create our 5 and 20-day moving average lines. To do that, I'm going to call this MA5 is equal to, and then you say scatter. There's numerous different ways of plotting. This is actually going to plot a line, even though it says scatter, which normally represents a scattered plot. And then you just pass in the index. Remember, those are the dates. And you're also going to pass in Microsoft and if you want the data that is in the MA5 column to be plotted, well, you saw it before, I showed you previously. Well, what you're going to have to do is put that inside of there. All right, and let's see, there's MA5, so just make sure you put MA5 here. This is another way to target a column. This is another way to add a column. This is another way to target columns. You can do it in multiple different ways, and I'm doing it different ways just to show you what the different ways are. So when you see them, you won't be like, what is that? I've never seen it before. All right. So now I'm going to just define some basics about the color, for example, of the line that is going to be drawn. And I'm going to say that I want it to be orange. And I'm going to say that I want its width to be equal to 1. And then I am going to say that I want, this is going to be for the key, I want it to be labeled with MA5 for moving average, 5-day moving average. All right, so now we're going to do the same thing for the 20-day. And I'm just going to call this MA20, like that, go scatter. We're going to use the same index. This is just going to be changed to 20 because that's what this is. So I'm going to just copy that just to show that that is where that is coming from. That's the column name. And here I just need to change this color. And let's say that I want it to be green. And I want this to be labeled M20. All right. Now what I want to do is I also want to show a volume bar on the plot. So I'm just going to go and bar. And again, we go and use the date to define the volume on each of the individual dates. So Microsoft and index like that, and Y is equal to Microsoft, Microsoft, and we want the volume data. So we just put the volume data in there and we get it. And I'm going to say that I want this to also have a name, and that name is going to be volume. All right. So what else do we want to plot? Well, what I would need to do is I need to create multiple different axes on this, actually multiple different y-axes. So I'm going to have to say figure is equal to make and subplots, and then specs is equal to, and like this, and you're going to say secondary y, because what I want is I want the volume to actually show up on the screen right with the stocks, because I think it looks neat. All right, so there we go, and there is that. A lot of doing this stuff is just doing what looks good to your own eye, and as the tutorials continue, I'll show you additional ways of styling, and eventually you'll find whatever works for you. So secondary and y is equal to true, and this is going to plot our price data with our candlestick charts. Throw this down here. I am also going to trace the 5-day moving average, and also going to trace the 20-day moving average, and then finally I am going to trace the volume onto the screen. And what else? Well, another thing I want to do is I want to create little buttons on the screen so the user can click on them and jump to specific time periods, but that takes a lot of typing. Not for you, that is, but here it is. So there we are. This is how you can define those buttons. And the valid steps, you can either jump with your buttons to different months, different years, days, hours, minutes, seconds, or show all of the data. So the way this works, you're updating your layout for your graph, and then you have a dictionary, and you're going to, inside of here, just define buttons. So just copy and paste this stuff in. And then you change your period. So if I want to define 15 minutes, I want to see the last 15 minutes for my stock. This represents the 15, and this says minutes is what we are working with. All right, and you can just put backward inside of there. That's fine. Again, 45 for count. Step is going to be minutes, and so forth and so on. And you do that for every single button that you want. Range slider, as you're going to see, is a slider that allows you to swing back and forth between different time periods also in your chart. So very useful. All right, so good stuff. Now, the final thing I want to do here is just update and add in some titles and define some widths and things like that. So figure is going to be the name that we are using to refer to our chart that we are plotting out on the screen. And if I want to update some things in it, I say update layout, X axes, and title. So if I wanted to provide a title for my X axes, well, that is going to be dates, and Y axes title, that is going to be stock price, and it's also going to double as volume, but whatever, that's good enough. I can put a title on this, and Microsoft Candlestick Chart. There we are. And if you're still watching the video at this point in time, I would be extremely happy if you would just say in the comments, hey, watch the video. It doesn't benefit me in any way financially. It just makes me feel good, like I'm not sitting in my basement talking to myself. Okay, now whenever you go, well, let's go and do this. I'm going to say figure show, and then I'm going to show you another way to clean some stuff up. All right, whoops, name column's not defined. All right, we got a bug. Let's see where it is. Figure, and whoops, I just typed in the wrong thing. So let's come up here, add trace. Whoops, that's this guy right here. And what this should be is volume. All right, let's run it again. Oh, I found out what I did wrong. Let's just change this to false. This is the volume, which is going to be not used with the other different plots we're making here. All right, if we run that, you can see right here is our plots with our moving averages, and we can move around. And maybe you see this or not, see these big giant long lines? Well, those are weekends, and you would also get them if you had holidays. So we want to get rid of that. How do we get rid of it? Pretty simple. Okay, so we want to hide the plots between, and you can hide the plots between both days, like Saturday through Monday, and also through hours, and also through holidays. So I'm going to show you how to do that. Problem is with the x-axis, which is the date. So we're going to say x-axis like this, and then we will say range slider. We want that to be visible, like we said before. That's going to allow us to slide around. So we're going to set this to true. We are also then going to define what we do not want to see. So that's going to be range breaks. And you just need to say like this, and then define all of the things you don't want. So I'm going to say bounds. And this means that I am going to block out data between Saturday and Monday. And what else do I want to get rid of? Let's go over here. I also want to block out data that occurs when the stock market is closed. It won't be any data. So that's going to be the 16 through 9.5. So 9:30 in that situation. And so 4 o'clock to 9:30 is what we're blocking off right there. And then I also want to define just a couple. The problem with holidays is sometimes they occur at different times, different dates. So you'll have to change this. But some holidays that I know are going to be true, we're going to have Christmas, always occurs the same day of the year. And then 2021-01-01 and the 4th of July. Hence, if 4th of July occurred on a day that wasn't the 4th of July, that would be quite weird. Okay, so, and you can throw other different dates in there as well. All right, so now we go like this and run it again. And you're going to see that those different blocks where there were periods of time in which we had no data are now gone. All right, and then you can look at this data using 1 month worth of data, 2 weeks worth of data. It's a little bit slow here. And 1 week, 3 days, 1 day. And you can see the moving averages as well as for the 5-day as well as the 20-day that's charted. You can also see volume down here on the screen at the same time. And like I said, let me zoom out, a little bit easier to see. Here are our keys, and you can see the representation with the different colors. And also you're going to be able to zoom in and zoom out on specific dates. So if you want to zoom into this area right here, it's going to completely fill the screen. All right, and another thing you can do is you can go and zoom in and zoom out just using these little buttons right here. So let's go and move this around. And you can also go back to the original chart exactly like that. All right, so I'm going to get more into candlestick charts. Talked about them in the NumPy Pandas and Plotly video that I told you about, but that is all for that for now. Okay, sometimes you want to download multiple stocks and get all the real-time data. So how would you do that? Well, you just go and throw all of the stocks that you want to download. So I'm going to say McCormick, and let's zoom in here again. And let's say that I also want Newmont Mining, and I want Old Dominion Freight. Okay, so those are the stocks that I'm looking for. I'm going to say stocks df is equal to yf dot and download. And then you just say tickers like this is equal to stocks. And then you go and define your period again. All right, so it's extremely easy to deal with this Yahoo Finance library. So I'm going to say period is going to be 1 month, and interval is going to be equal to 5 minutes. And all this is free, by the way. So you don't have to pay for any of it. And then you go like this, and then you can see all of that data that we just had. All right, so let's move on to simple moving averages. Now, a simple moving average is just going to allow us to see the big picture whenever we're analyzing a stock. It, however, takes time to catch up to current trends. And this lag, for example, with a 100-day moving average, like I said before, is going to be the number of days divided by 2 or 50 days. And long-term moving averages can be extremely important, and as you're going to see later in this video, when we talk about death crosses and golden crosses, how important they can be. So what I want to do is I want to go and download Microsoft, Newmont Mining, and the S&P 500. So I'm going to say Microsoft, and I'm going to call this df is equal to yf.download. And again, we're going to say tickers is equal to, and I'm going to get Microsoft, and period is equal to 10-year, and interval is going to be equal to 1 day. All right, so I'm going to get all of that for Microsoft. And you can go and just type in Microsoft DF if you want to see what the data looks like. And then I'm going to get the same for Newmont Mining. And I just have to change the ticker for this. So Newmont Mining, like that. And then I'm going to do the same for the S&P. And if you want to get an index, you're going to have to use a caret symbol. So GSPC, like that. And tickers right here. Remember I said the caret symbol. So you're going to go caret and then GSPC, like that. And just to show you gspc.df, what that looks like. Well, I'm going to run all of this. Very important to run them all. And you can see that they downloaded and like that. And there we are. So there is our S&P data going all the way back to 2011. So what I want to do now is I want to show you how to calculate 20-day moving averages. And then we'll get into death crosses and golden crosses and so forth. So I'm going to say Microsoft MA20 is going to be equal to, and then I say Microsoft DF, and I want the adjusted close price. And just like we did it before, we're going to say rolling, and this is going to be a 20-day moving average. So you'll say 20.mean, like this. And I want to do the same thing for the other two stocks. So let's just paste those inside of there. And this is going to be Newmont Mining. So Newmont, like that. And this is going to be Newmont data frame. And then GSPC, like that, for the S&P. GSPC, like that. And then just make sure you run it. And how I'm running it is hitting shift and then return. Probably should have said that before, but there you go. All right, so we got that. Now we want to do the same, but we want to calculate the 100-day moving average for all these different stocks. All right, so we'll just pop this inside of here. And like I said, we are going to study things such as the 100-day moving average so that we can see long-term trends. All right, so let's just paste that inside of here. And let's change this to MA100, like that. And then all we need to do is just change this to 100, like that. And then we can just copy this. So copy and paste and paste. Change this to Newmont Mining, like that. Change this to Newmont Mining, and all that's the same. GSPC, like that. And GSPC. There you go, and run it. And we got all of that set up. So now what I want to do is I want to plot Microsoft with its moving averages. And we're going to do kind of the same type of thing. So we might as well just come up here and, well, it's going to be a little bit different actually now that I think about it. All right, so I'm going to say MA20 is going to be equal to, go and scatter, and we're going to go X is going to be equal to Microsoft MA20 and dot index. So we're going to get all of the moving average, the 20-day moving average dates, and the y-axis is going to be all of the data that is inside of there. So MA20, like that. And then I'm just going to define some specifics about my line. So I'm going to have my line color be equal to orange, and I'm going to have the width be equal to 1. And I'm going to say the name is going to be equal to moving average 20, like that. And we're going to go and just copy that and paste, and we're going to do the same for the 100-day moving average. So there's that. Change this to 100, change this to 100, and instead of orange, let's have this be green, and change this to 100, like that. And then down here, this is going to be called Microsoft PRC for Microsoft price data. And this is going to be Microsoft, get rid of this. This is the data frame with all of the price data. And this is going to be Microsoft again, DF. But what we're specifically interested in is the value in the column called adjusted close. So we have that. And let's make this line blue. So there's blue and width, and then change this to price for the title for that plot. Then what we do is we create our figure. We're going to draw all our plots on. So I don't know why that bounced over there. Let's just bring it over here. There we are. Go and figure like this. And then we're going to just add our traces to the screen. I don't know why. I think it's doing this because I have the things zoomed in so far. All right, so figure and trace. Whoops. Add trace like this. And then inside of it, you just say MA20 like that. We're going to do the same for all of the other ones as well. Let's come down here and drag this over here and do it again for the next and drag that back over here. And then this is going to be 100 and this is going to be Microsoft price like that. And then we want to update our x-axis to display some information. So we'll say update at x and axes. And then I'm going to say range slider. Bring it back over here. Range slider. Maybe we'll zoom in here and see if that stops doing that. So axes and range slider like this. And we want it to be visible. That's a little thing you can drag around on the bottom of the screen, which is really cool. So we're going to make that true. We want that to show up. The title we're going to have is Zoom on Dates Using Slider. And then I'm going to say figure and update Y axes. Title is equal to stock price. And then figure show like that. And if we run it, whoops, well, I got a problem here. Oh yeah, I have the quote jumped out of there. Let's move it over here, run it again. And where's that semicolon at? Right here, change that to title. And there you can see is our moving averages. All right, and if we go in here and we zoom in, we have our 20-day as well as our 100-day moving average. You can definitely see the signs here, and we can just keep dragging and dragging it closer and closer, that whenever the 20-day moving average breaks across the 100-day moving average, that is definitely a sign that the stock is in an uptrend, and likewise, whenever it falls below it, that it is in a downtrend. And of course, this is because the stock market fell a whole lot because of the pandemic. Now that brings us to exponential moving average. Now I've been talking a lot about the lag that is introduced whenever you're using simple moving averages. Well, the exponential moving average can be used to reduce that lag by putting more emphasis on recent price data. And I'll show you how to calculate that. So I'm going to go and calculate the exponential moving average on a 20-day basis for Microsoft. So I'll call this EMA 20 equal to Microsoft, we're using the same data, DF, and adjusted close, like that. And then you just say EWM, and if you want 20-day, you say span is equal to 20, and adjust is equal to false, and then you go and get the mean, like this, all right? And we are going, now that we have that calculated, what we can do is I'm going to say EMA20 is equal to go and scatter, and X is equal to Microsoft EMA20 and index for the x-axis. And then I'll do Y is just going to be Microsoft EMA20, which is just the real data. And then again, we're going to do the line information. So let's just copy that. So all of this stuff right here, let's just copy the whole thing. So let's come back down inside of here and go right there, paste that inside of there. And I'm going to say that this is going to be the color green, like that. And I'm going to change the name to EMA20, exactly like that. And then I'm going to want to do the same type of thing for the 20-day moving average. So let's just come up here, MA20, same exact thing, and the price. So I'm just going to copy all of this, and I just want to show you the difference between exponential moving averages and the simple moving average. So let's get rid of the 100-day moving average like that. And then we can come down here, and guess what? The other stuff's going to be basically the same. So let's just come in here and grab all of this again, and just to save some time, and we'll paste that inside of there. And the difference is going to be MA20, and this is going to be EMA20, like that. And the price data is going to be the same for this. So you can just come in here and run it. And you can see that the exponential moving average is ever so slightly less of a laggard with our data in comparison to the simple moving average. All right, you can play around with that. Now to finish off, I want to talk about the death as well as golden crosses. Now, anytime a death cross occurs, this is a significant sign that a major market sell-off is likely to occur. And likewise, whenever a golden cross occurs, that is a sign that a major bull market is about to occur. And these are highly accurate and have been very, very important technical tools for our use. So what I want to do here is I'm going to say GSPC DF. I'm going to show you some information with the S&P 500. So YF dot download and tickers is equal to and caret GSPC, and the period I'm going to use this time is max. I want all the data, and the interval is equal to 1 day. I like that. All right, so we got all that. And if you want a GSPC DF like that to see that we downloaded all that. So it goes the whole way back to 1927 up through today, and it's getting all this data every single day. So just so simple and just free, and that is amazing. All right, so we're going to say GSPC and MA. What we're going to do to calculate the, to demonstrate the death and golden crosses is we are going to use a 50-day and a 200-day moving average. So 50 like that is equal to GSPC.df, and then we can say adjusted close and rolling, and we want window is equal to 50. And also I'm going to get our mean off of this, obviously. So there's that. And I also want a 200-day moving average. So throw that down there. Change this to 200 like that. Change this to 200. So that's simple. We have it. Now I want to go and plot all of these. And we're going to be using scatter plot again. So I'm going to just come up here and steal that. So I want to come up here and go grab this guy right here. Actually, I'm going to grab all of these guys right here. Copy, come down here, paste that inside of there. There we are. All right, so I'm going to call this MA50. MA50. And we're going to change this to GSPC MA50. And index stays the same. GSPC, we'll just get rid of this whole thing. So GSPC underscore moving average 50-day. And let's make this orange and width 1 and change this to MA50. MA50 like that. And let's go and paste this down here. And for this one, this is going to be the price data. So GSPC and scatter is all fine. Change this to GSPC index, and this will be GSPCDF, GSPCDF, and adjusted close is fine with that. And blue is good. Width 1, all good stuff. Price also fine. Now let's go and plot the 200-day moving average, and you can see this magic. So just change that to 200, go scatter, change this to 200, and this to 200, and change this to green. So there we are, and change this to 200 as well. All right, so we got all those set up, and now we just need to change these guys. So this is going to be MA 50 and MA 200. So get rid of that, and MA 200, and GSPC for our price right from there. And everything else here, I believe, is exactly the same. So yeah, let's go and run it. Oh, wait a minute. This is going to be just MA50. Sorry about that. And MA50 again. Get rid of that. And the same for this. And if we run it, you can see all of that data plotted right here on our screen. And you're going to see numerous examples of both death crosses as well as golden crosses. All right. So if we zoom in to these different areas right here, you're going to see, all right, so we're coming up here. Now our orange, as it says, is the MA50, and this is going to be the NA20. So we can zoom in here and take a look. Here you can see the orange is going above the green, which is a major bull market sign. And you can see that, yes, indeed, the S&P did go up for quite some time. Then you're going to see that it touched but did not go through in, what would that be, 1997? And again, continued. Let's move out here and let's move in again. And here you can see once again that it hit that, the 50 hit the 200 and went under it. And you can see that the market declined dramatically for a long period of time. And you can see golden crosses, and you can zoom in here and use the little slider. And I'm sure you can find numerous examples of death crosses as well as golden crosses. So really cool stuff. And the last thing is, I just included this just as something for you to play around with. There are numerous different technical analysis tools and chart pattern tools available in Cufflinks Quant Figure module. And just to give you an overview of what is coming up, and you can just go and add these different patterns onto your charts just by going .add Bollinger Bands, just like it says right here. See? And you can play around with all these different guys, look them up, and have some fun with it. And whenever you run all this, what you're going to do is, after it goes and plots, you can see examples of Bollinger Bands, but you're only going to be able to see it if you zoom in. So you just go and zoom in on these different areas just by coming over here to the end, and so forth and so on. And I'll get more into Bollinger Bands, much more. And like always, please leave your questions and comments down below. Otherwise, till next time.